tell me why. Why do equities still reign supreme in 2024?
Yeah, thank you. I think it's a matter of history. Look, if you look over the long run, equity returns have been higher than bond returns, and that compounds over time, and that compounding is really important to investors. So I just want to make sure the message is out there that yes, bonds are, like I said, the best they've been in a long time, but don't forget about equities, because equity returns are what's going to form the ballast in the portfolio, and that's what's really going to drive capital appreciation for clients over the long run.
But I look at the calls that started this year. I did a little trip down memory lane of January 2024. Goldman called it the year of the bond. Bank of America says they'd rally big in 2024. PIMCO called it prime time for bonds. I mean, were they wrong? Did we sort of over-egg the ability of the bond market to rally this year?
Well, I think if you look at the returns of stocks year to date, it tells the story, which is the story of the long run. On average, stocks outperform bonds, and that's true whether you look at a 1-year period or a 10-year period. Of course, the odds of stocks outperforming, the longer your time horizon, the higher those odds are.
Tony, does concentration risk scare you at all when, again, on a day like Friday? I've said this stat a lot over the past 40 minutes because it is remarkable that NVIDIA can swing in one day to the degree of $250 billion. That's got to be some sort of record. Does that sort of thing not give you pause about the direction of this equity market with so much hanging on so few stocks?
Well, certainly the indices have become more concentrated. That is true. But I think, as a stock picker, I don't just look at the cap-weighted S&P 500. I also look at the equal-weighted index, the equal-weighted S&P 500. And that tells a very interesting and different story. Usually, historically, those valuations have been about in line. Right now, the equally weighted S&P 500 trades at about a 23% discount to the overall S&P 500. So I think that's really interesting. You're starting to see the market broaden out some this year. More recently, you see financials doing well. You see parts of industrials, et cetera. So I don't think it's just about the Magnificent Seven, particularly if you're a stock picker. I think there are ways to find exposure to some of the hottest themes like artificial intelligence and other innovative themes through other smaller mid-cap, even large-cap stocks, just not even mega-cap stocks.
Where's that AI theme not played out to the extent it should be? Because there was a moment in time, maybe not as much anymore, but all an executive had to do was mention AI on an earnings call and their stock would rally. Where are we underappreciating the AI narrative?
Yeah, so we really think about it in terms of a tech stack, and right now the hottest area is that bottom layer of the stack, the chip and hardware layer. And that's where a lot of the attention is being placed right now. But as we look forward, I think what you're going to see is companies differentiate themselves in how they use artificial intelligence. So one area that we've been looking really hard at and investing in broadly is companies that own and sell data. They make good money off of that today, but if you think about an AI world just makes that data more valuable and will allow them to price that data even higher. And so I think that's a real area of profitability. We're also going to see companies cost cut using AI. Certainly we're seeing it right now in terms of coding. We're seeing that AI add a lot of productivity to coders. We're going to see it in call centers. And so I think we're going to see the use of AI broaden out. And maybe you're starting to see that in the productivity numbers. If you looked at fourth quarter productivity numbers, they were quite good. And so that's what I would expect as time plays out.